YouTube, what it do? Lil Petty back at you guys with another stock market episode. Alright, you guys, so we got a lot to talk about. In this episode. I just recorded this video. The microphone cut out in 5 minutes. I'm gonna try my best to make another video as good as the last one, but just bear with me. So, today in the stock market, we had greens. As you guys can see, everything seemed to be going up. The only stocks that didn't go up today were healthcare, consumer staples, and utilities. In the Russell, what went up? The banks. The banks had a green day. Informational technology, industrials, communication services. Everything seemed to be going up today. The NASDAQ, the uptrend is still intact. So, without further ado, we are going to get into this episode, and we got a lot to talk about, so stay tuned. Alright, the first thing I want to talk about in this episode really is going to be with the psychology, and it's trading with your mind, having a trading mindset. You need a trading mindset if you want to be successful in the market. If you don't have a trading mindset, then you're going to come into this market clueless, blueless, don't know what to do, and you're going to get cooked. You're going to get slaughtered. You're going to be a pig trying to buy every dip, sell every rip, and you're going to get smothered. So if you don't have a strategy, that is the first thing you need to do. You need to find a strategy, and then you need to learn how to execute on your strategy. So that is the main focus when we come into the stock market. We need a trading mindset. Our heads need to be clear. If you're not feeling the trades, don't take the trades because you will lose money. Now, I want to talk about daily contracts because we had people today. Let's go to SPY. People like to trade the daily contracts, and I don't like to really trade the daily contracts too much because if you do not get in the money, you lose 100% of your investment. So, if say you put $1,000 in and your contract doesn't get in the money, and you sell, you can either sell for a profit if the stock goes your way, but it's a timing thing. You need to be quick. If you don't know how to scalp, then you can't take advantage of the volatility, but the theta can still get you. So for instance, and that goes back to, I want to talk about why everything was green. Everything was green today because we had the gap up. Now, when we gap up and you go into this resistance, it's kind of harder for you to go long. Now, the only reason why we went long today is because we held the key resistance. We got over the resistance and we held this as support. So that was the clue to go long. Now, people were trying to buy puts, thinking that it was going to come fill this gap, but it never came and filled the gap. So say you coming over here to play the dailies, and now you want to look to see, okay, SPY opened up at 280. Let's zoom in real quick. 284, 285, whatever, just round up. Now, you come over here and look at the options. So 284s, we're going to look at the 284s. This is the chart. This is the options chain. This is the options chart of the option, the instrument that we're looking at. So as you can see, it came up. It opened up. It opened up at 45 cents. Now the stock started to go up, do whatever, and the stock was bullish the whole day. We never got the 1226 cross that I talk about, and we were just bullish. We never got the cross on the 5 minute. We were uptrending the whole day. So if you would have bought these $84 puts at 45 cents in the morning or whenever, you would have lost because the contracts just kept dwindling down. They dwindled until they were too worthless because the contracts expired today. So when the contracts expire today, you need to be in the money for your contract to work for you. Now, for instance, if you would have bought the opposite side, the calls, your calls gapped up from Friday. So if anybody that bought calls on SPY or whatever stock you were trading on Friday, your contracts ended up gaining value because we gapped up. So these are trading at 27 cents. They gapped up to $1. These contracts still expired today. They stayed in the money the whole day. So these contracts never basically pulled back because the stock never pulled back. You're just gaining the value of the intrinsic. So boom, the stock moved up all the way. The contract went up to $2. You could have sold at the end of the day, sold whenever. You would have made a profit on buying these at the dip any time of the day. If you would have bought early, you could have bought up here and still made money, unless you bought low, bought high, and sold low. So that. Now I'm gonna show you guys what happens when you play dailies. This is a key example. When you play dailies, you can blow up accounts. This is real money, blowing up accounts, playing daily, playing contracts, daily contracts. You can lose 100% of your investment. This account has $2.95 in it. And I have 3 of these Apple puts. Now, if Apple doesn't get to 110 in 17 days, this account is done. So this just shows you the risk of playing daily contracts and really just coming to the options world, and not, if you don't know what you're doing, you will lose your money. And this is why they say options are risky. You blow up your money. You can blow up accounts. And I want to show you guys proof. I've blown up an account. I've blown up an account from trading dailies, trying to go big, trying to make quick money because you want to be on this side. Say, for instance, you got these 286s or these 285s. Ooh, yeah, you bought these at 9 cents, and you know these ones went up to $1. So you spent, you know, $9, and then you got $100, or you spent $900 and you got $9,000. You know what I'm saying? So this is the result of trying to always play dailies, and you get accounts blown up. So I just wanted to put that out there. And a way you can actually not blow up accounts is by basically playing money, giving your options time. So let's look at, for instance, what was that stock? I think we'll just go to Boeing real quick. No, not Boeing. Damn it. Yeah, we'll just do Boeing because it's on the top of my head. So for instance, bam. So Boeing, I'm holding a position over here with time. So I have 17 days and I'm out the money. You can't even see my contract right here. So I'm going to have to put in 50. Boom. Now you can see where I'm at. Okay, so I have this 420 call that right now it's worth $1. But as you can see, this contract a few days ago was worth 25 cents, and it's going up because the stock is going up, but you're out the money and you bought it for a cheaper price. So today these contracts were 40 cents and now they're at $1. So as you can see, giving yourself more time and going further out can still be beneficial. You don't have to come up here and play these $8 contracts, you know, spend $200 bucks, but you still want to be in a reasonable range. Like, you don't want to come out here and buy these 450s for 19 cents. Like, it's not gonna move unless Boeing just rips. So we're trying to be reasonable, and we want to be realistic with the trades. You want to get close enough so your option is gonna gain value as the stock goes up. But we probably won't see Boeing get to 420 in 17 days. It could. It's a big possibility, but it's more than likely not. So we're just gonna trade the contract value, shorter time, but we giving ourselves more time. Now, let's look at a few more of those real quick. You can give yourself more time. Dang it, I need to lock this up. All right, so we're gonna look at Apple. Was it Apple? Yeah. So okay, boom. So now we have these weeklies, these 25s. Boom. Now we have the 205s, and these are trading at 55 cents. So like I'm saying, we're giving ourselves more time on the contracts, and we're going further out, and we're playing cheaper contracts, so we can still see value gain as long as the stock goes up, and that's gonna increase the value of the contracts. Now I also want to talk about I think I talked about it in the earlier part of the video, but I want to talk about gapping up into resistance. So when we gap up into resistance, like I said, it's harder for us to go long, but as long as the trend is in our favor, then yeah, the news came out on AMRN. The stock had went up. Boom. It went up, and then I got faked out on this day. I was trying to go long to see the continuation. It ended up having a gap fade. So a gap fade, it consolidated the next day. I took my eyes off of it, and it went up. Boom. So today, it gapped up, had another gap fade. We're looking to see if this stock can get continuation tomorrow. I will be watching this stock. This stock is a little bit choppy, but when it gets the move, it gives us the move. And that's what I like about this stock. Yeah, so this is a AMRN. I want to show you guys Boeing. Boeing did good today. Boeing went up. It had the gap up, and it just been continuation. This is the 15-minute chart. We go to the 5-minute. Had the cross, the sell-off in the morning, held support, morning panic buy, got the 12 cross right here to go long. No looking back. Citi, we're gonna look at the Citi because the bank stocks did good today. Citi was uptrending. That was a nice trade today. Citi, Netflix. Let's look at Netflix. Netflix was pushing up today. We had continuation, the gap up. Now we're gonna see if this stock can hold. And Amazon. And these are all the 5-minute charts. So Amazon basically had the gap up, and I wanted to play Amazon, but we got the gap up, so it was like we gapped up into this resistance. It was just kind of choppy, and then we got the breakout. But overall, when you gap up into resistance, it's harder for you to go long. It's mostly set up to go short, but you can get a gap and go. But as you see, like if we come over here to the NASDAQ, we're very, let's go to the 1 day. We can go right here. We're coming up high, and we need to get above some of these spots for me to feel comfortable to actually hold longer term. So the trend is our friend until the very end. We are still holding EMA lines, support lines, all the good stuff, all the good juicy stuff. But yeah, so as long as the stocks are continuing to go up, we are bullish. We're not trying to time the top. If we do get into some of these areas and the stocks do pull back, we will be more likely to put in our shorts and our puts or whatever. But as for now, the markets are pushing up, and we are going to try to take advantage of calls. And yeah, so that's gonna be this for this video. And yeah, I appreciate you guys watching, and we out of here.